Is it really a good time to buy real estate right now, or is it too late? Home prices have hit brand new record prices after brand new record prices, including interest rate. It did the same thing. In this video, I'm going to show you and give you some valid reasons why you may not want to buy a house in this economy and in this time of the housing era. In my opinion, the housing market is not what it used to be 3 to 5 years ago, so it may not be the right time for you to buy. There are a lot of changes coming, and there has been already a lot of changes happening as we go along. Now, I'm not saying everybody deserves not to buy a house. In fact, they should. But depending on your circumstances and situation, not everybody should buy a house in this economy. Let's look at these stats for a change. First off, home prices have been going up since 2012, 2013. It's 2024 today. This has never happened in the history where prices have gone up over 10 years straight. So that's scary right there. If we look at this chart, it shows that prices started going up in 2020 drastically. 2021, prices jumped almost over 10%. In 2022, they jumped over 17%. And 2023, they jumped on average of 10%. So just in the last 3 years, it has jumped so high, not counting the jump since 2012 to 2013. So that has been a significant price increase. So usually real estate is in cycles. It has gone up for over 10 years. Is it set to go down? Who knows? This real estate market is challenging, hard to predict. But if you're buying right now, you're right at that tipping point. Or are we? So we may think that prices are going to go down. That's what I would think, and that's what I hope for, so all the buyers could buy a house, not only with these high home prices, which needs to come down, but also with the high interest rate. But look at this chart. It's a prediction or the housing market forecast of what's going to happen with home prices next year and the year after that and the year after that until 2028. Experts predict, and this is a prediction from Fannie Mae, they're saying that in 2024, on average, home prices will go up by 2.35%. In 2026, they'll go up another 3.67%. And in 2028, it'll go up 4.15%. So even after all these years, the prediction is that home prices are not dropping. In fact, they're rising and rising and rising. And what makes home prices even more expensive? Well, the interest rate. In 2021, the interest rate was 2.95%. And as of November 21st, 2023, the rate was almost 8%. That adds fuel to the fire. That adds to the affordability to your home purchase. So the $1 million question is, should you buy a house now or should you wait up? You should not buy a house if any of these scenarios apply to you. Let's look at those. Owning a house is an American dream. It makes you financially rich. But at some times, you may not be able to buy even if you want to buy. After all, as this chart shows, you don't want to be the 93% of the buyers in 2023 who regretted buying their house. Yes, 93% regretted buying the house last year. So the first reason not to buy a house is that you may not have enough down payment to purchase a house. As you know, to buy a house, you need anywhere from 5 to 20% to buy a house. And as the home prices go higher and higher, your down payment goes higher and higher. But one of the things that buyers never think about is what is an opportunity cost. Nobody thinks about it, so let me explain. So let's say you're buying a house for $400,000 and you're thinking about putting 10% down. That's $40,000 that you need to put down. And hopefully, if you're thinking of buying a house, you have that down payment already in hand and you feel comfortable letting go of that $40,000 for years and years to come. But what the opportunity cost is, which nobody thinks about, is what if you think about holding off on purchasing a home because interest rates are high, inflation is high, home prices are high. It's very competitive out there because the inventory is so low at historic lows. What if you take that $40,000 that you have and you invest in something, in Tesla stocks or Nvidia stocks or mutual funds or in Standard & Poor's or in some ETFs, anywhere you invest, can you get a 5%, 10%, 8% return on that? So that's an opportunity cost. So even though you may not put it as a down payment on a house, you could get returns on that down payment until the real estate settle down, until the prices you feel are reasonable, and until you feel very comfortable letting go that $40,000 so that you can grow when you buy the house. And in the meantime, you growing your money with the investment that you have in the mutual funds or stocks or Standard & Poor's, etc. Of course, if you put that $40,000 into a house, then that is your equity in the house and it's considered very safe. But it's only safe if the prices go up. So as you stay in the house for 5 years, 7 years, 10 years, in this economy and in this housing environment, you may want to stay for 10 years for your equity to be safe. Because let's say you buy the house for $400,000 and in 2 or 3 years, the home price drops to $350,000, then the $40,000 that you put down is wiped out. It's clean slate and there's no equity. So to get your return on equity in this economy and this housing market for at least 10 years or more, according to the statistics that show that, historically it has been known or it has been shown that you have to stay in your house at least 7 years to protect your equity and actually grow your equity. But in this economy and this housing market, you may have to stay for 10 or 12 years to protect your equity so it does not drop and you don't lose your equity. So before you jump into buying a house, you need to weigh out what's best for you right now. Do you want to put that down payment and lock it in for 10 years? Or do you want to wait a little bit, see if the rates drop, see if the home prices drop, invest your money somewhere in the meantime, and then buy when the time is right? This may be the right time to buy. This may not be the right time to buy. For each buyer is an individual scenario. It may be a right time for me to buy a house, but it may not be a right time for you to buy a house. We each vary in our circumstances, situation, financial situation, personal situation, and career situations. So it's different for everybody. You have to weigh in when's the right time for you to buy. As we go along, please comment below what you feel is the right time to buy, or if this is a right time to buy or not a right time to buy. Please share and also subscribe while you're on my channel. And I thank you for coming to my channel. The second reason you may not want to buy a house is if you only budget your mortgage payment as your budget towards buying a house. Many of the buyers make a mistake when they talk to a lender and the lender approves you. Let's say the lender approves you for a home purchase price of $400,000. Just because you are approved for $400,000 doesn't mean that you should buy a $400,000 house. And the reason is because there's a lot of additional costs that are involved with buying a house. Remember that lenders will approve you for how much they can lend you the money. Doesn't mean that you should take all the money that they lend you. And the other thing is you have to compare your mortgage payment with your rent payments. They are not the same. Let me explain that. Let's say you're renting right now for $2,000 a month and your lender has approved you for a mortgage payment of principal and interest for $2,000 a month. Now there's a big difference in $2,000 mortgage payment and the rent payment, because on top of the mortgage payment, when you own a house, you have other expenses that a lot of buyers do not consider. And then as they buy a house, as they try to close escrow, they hit a panic button or a panic situation and buy the house anyways because they've gone into the process, they've made some offers, and they're so excited that they buy the house, and then they find out all the other costs that I'm just about to talk about. So let me give you an example best to explain this. Let's say you're going to buy a $400,000 house and you're going to put 10% down, which is $40,000 that you need as a down payment. That means that your loan amount is going to be $360,000. And if you just take an assumption that the interest rate is 6.5% and a 30-year fixed mortgage payment for 30 years, your payment comes out $2,086. Now, if you're renting something for $2,100 and the mortgage of $2,086, it seems like pretty hand in hand. But remember, when you buy a house, you have additional cost that you have to account for. Number one, you have the property tax. In this case, I'm in Orange County, California. It's 1.1% property tax. So let's assume the property tax is $380 per month. Then you have insurance, which comes out to $67 per month. Then you have the PMI, which is the private mortgage insurance, and that is applied to loans that have less than 20% down. So in this case, it comes out at $121 a month. Then on top of that, because you are a homeowner, a proud homeowner, you also have maintenance costs. Every home has maintenance cost. That could be $100 a month, $200 a month. That depends on how new or old the house is. On top of that, there are repairs. There's always repairs. And that could be $100 a month, $200 a month, $300 a month. I remember when I first bought this house 25 years ago, I moved in very excited. I had blown all my money in closing cost and down payment, did not have any money in my bank. And it rained because I closed escrow in the fall, way back, and it started raining. and I had a major roof leak that cost me $10,000, and I was scrambling to get that $10,000. I had to borrow money, and I had a big issue with paying it back. So anything can happen. So going back to all those costs, you have a rent. If you would have rented for $2,000 a month, and now that you're going to buy a house, your principal and interest was $2,068, and after we add all those costs, your payment could come out to $2,500, $2,600, maybe up to $3,000 a month, because you may also have HOA fees, homeowners association fees, and that could take you up to $3,000 a month. So all of a sudden, from being comfortable paying $2,000 a month, you are paying almost close to $3,000 a month, which is a big shock. And now you're very tight, and anything can happen if you are not comfortable with the payment. And anything can happen if you are not comfortable with that payment, and if you don't have those funds or the income to have you keep paying that for at least 10 more years, month after month after month. So if you're tight on your budget, and if your limit is $2,000 or $2,500, we highly recommend that you stick to your budget, talk to an accountant, talk to your loved ones, talk to some people who have owned the homes, so you know exactly how much your closing costs are, how much your monthly payments are, and you know 100% exactly what the payments are. It could be a nightmare, although it could be a big financial advantage, but it could go either way. So do your homework, be very cautious, know all your numbers before you jump into home ownership. The third thing that a lot of buyers don't think about is what we call the transactional cost. As I mentioned earlier, you need a down payment to buy a house, and we took an example of 10% down on a $400,000 house. But on top of that, there are closing costs and transaction costs. We have escrow fees, title fees, notary fees, lender fees, appraisal fees, home inspection fees. All those add up anywhere from 2 to 4% of the purchase price. So if you buy a house and put 10% down on a $400,000 house, comes out to $40,000. And if we assume, let's say that 3% is your closing cost when you buy a house, that comes out to $12,000. So all of a sudden now you're going from $40,000 to add another $12,000 to $52,000 that you're gonna need to put down and to close escrow. And that really adds up. And you have to factor that in should you decide to sell later on, and you also have to have that much money to close the escrows. And a lot of the buyers are not quite ready. They may be ready for the down payment, but the closing cost varies anywhere from 2 to 4%, and many buyers struggle to come up with all the down payment and the closing costs, and that could be a shock when you buy the house. Keep in mind that after 7 years or 5 years or 8 years, when you do decide to sell, you have additional transaction cost, because you have cost when you buy the home, and then when you sell the home, you have the commissions to pay the brokers. You have escrow fees again. You have title fees again. You have escrow fees again. If you have a homeowners association, there's homeowners transfer fees again. There's notary fees, there are courier fees, so many fees. And the fees add up anywhere from 6 to 8% of your purchase price. So when you bought the house at $400,000, you had anywhere from 2 to 4% in closing costs, which is pretty much gone, because every time you pay the property tax, every time you pay the insurance, every time you pay the HOA, that money is gone. It's not recoverable. So now, after all these years, when you go sell, you have the commissions, closing cost, all that adds up to 4 to 6%. So if your house value did not go up, and if we assume the home value is still $400,000, you need additional, let's say 6% in closing cost of $400,000, you need additional $24,000 that's going to be gone. So not only did you spend $12,000 in closing cost when you bought, now you need anywhere from $20,000 to $24,000 additional cost to close. And in the meantime, over the years that you've stayed there, you've lost money on property tax and insurance and all that. So all of a sudden you could be out $70,000, $80,000 that is not recoverable. So when you do sell the house in the future, you want to make sure that not only do you get your $400,000 back and the closing cost, but all the money that you have not recovered. So you have to sell your home at $450,000, $480,000, $490,000, depending on when you sell. So all those factors has to be considered for it to be a valid home purchase. Otherwise, if you have to sell, let's say in 3 years because you lost a job and the home values go down to $350,000, not only have you lost a $50,000 in price drop, but you lost the closing cost when you bought and the closing cost when you sell. So that could be a significant loss to you. So buying a home, you have to consider the transactional cost going in buying and going out selling, because that's a big factor that you have to consider. So it's very important that if you buy a house, you want your house value to go up and up and up, and not go down. I talked earlier about the cycles. So let's say the prices have gone up from 2013 until today. For 10 years, 12 years, it has gone up historically. And now you buy a house and let's say the prices start going down and down. It could be 7-8 year cycle before it comes up. So are you willing to stay in that house for 7 to 8 years, maybe even 10 years before you recover your price and your closing cost? So it's a big commitment. It takes a lot of effort, a lot of homework, a lot of understanding of the figures and the market for you to purchase this home. And I don't mean to be scary. I just want to make sure you have the right data when you purchase your home. So the fourth thing I was talking about, I have already mentioned a lot of those stuff in the point number 3, where if you buy a home in today's housing market with today's high prices, with today's high interest rate, you want to make sure that you're buying the home for long term. Let's say I buy a house today for $400,000 and the prices drop. Am I willing to stay, or do I have the comfort? Do I have the funds? Do I have the commitment? Do I have a sound job to sustain buying the house for 10 more years from today rather than 5 more years when I was planning to move to Texas or Florida or whatever? I may have to stay 7, 8, 9 years before I move to my parents' vicinity or to my friend's vicinity, or I would want to switch a job. So it's very important that if you buy a house in today's economy, in today's volatile housing market, you are thinking long term and not short term. It's not like you fill out a rental application, you get approved, you move in, and after a year, if you feel like moving, you can move out and find another house or move to Texas or move wherever you want to. Buying a house is a long-term commitment. And as the housing market is more volatile and as the long-term housing prices have kept going up and up and up, we don't know how much it'll go down for 5 years, it'll go down for 3 years, or it may go down for 10 years. We don't know. So if you're going to buy right now, have a long-term plan, long-term commitment to stay in that house. By the way, please make some comments on what you think is the right time to buy or not a right time to buy, or would you buy in this market or not buy in this market? We want to find out what you feel, because in your area, the housing market may be different than in my area. So each market is different and each one's situation is different. So we would like to see your comments. Please comment below. We would really appreciate it. The fifth reason that you may not want to buy, or this may not be a good time to buy, is that you must plan on having a reserve fund. And the lenders recommend and financial planners recommend that you have at least 4 to 6 months of reserve funds. Now, what are reserve funds? Well, if your mortgage payment is, let's say, $3,000, and when I say mortgage payments, I include the principal, the insurance, the tax, the interest, some repairs, some emergency costs, some maintenance costs. So let's say your payment is about $3,000 a month to own that house and to maintain that house. Then the financial planners and the accountants and the lenders, and in general, we recommend that you have 4 months. So 4 months times 3, have at least $12,000 or maybe up to $18,000 in your savings account or investment account. You have it handy. What happens if you buy the house and a year later you lose a job, or you have a major medical issue, or there's a major disaster and you're not able to pay, or you have a major expense with your family or with your house or with your situation? Do you have the money to pay every month for up to 6 months if you don't have a job or if you don't have a savings account? So it's very important that you have that reserve account. You would be surprised how many people cannot afford to pay the house next month if they lose a job. There's very few people who have reserve accounts. So now it's highly recommended that you have a reserve account so that you are not caught into a trap should you lose a job or should you have an emergency and you cannot make the monthly income that you are making, and you can survive for 6 months with your reserve accounts. By giving you all this information, there's absolutely no reason I am trying to discourage you from buying. I just wish and I just hope that you as a buyer are intelligent about buying the house, are well educated about buying the house, know what to expect when you close escrow and what's going to happen after 2 years or 3 years, and you are very well prepared, you are very well comfortable, you have the funds and the resources to keep that house for 5 years, 7 years, 8 years, 10 years, enjoy the life, reap the benefits of home ownership, grow your equity, grow your net worth. But at the same time, we don't want you to get in a situation where you lose a job or something major happens, you cannot make the payments and end up in a foreclosure or end up losing the house. Let us look at this chart. Right now, the foreclosure activity and the short sales activity is very low, but since 2021, the short sales activity and pre-foreclosure activity is on the rise, even though it's significantly low compared to 2010, 2008. There were 2.9 million foreclosures in 2010. Right now, we are looking at in 2023, 357,000 only compared to 2.9 million in 2010. But if you look at 2021, there were 151,000 foreclosure activity. It has doubled that in 2 years. So do you want to be one of those? No. And that's why knowing all these stats, knowing all those numbers are very critical, because we want you to grow your net worth, enjoy your home ownership. I did a video a couple of weeks ago. The link is right here. It talks about why 90% of the home buyers in 2023 regret buying a house. I highly recommend that you watch this video if you are watching the current video. I wish you good luck. If you need any resources, direct message me. And I hope you are an intelligent buyer and make a sound decision in buying a house, whether it's now or 3 years down the road. Thanks for watching.